Testing 1, 2, 3, testing 1, 2, 3. All right, everybody, welcome to this episode of Business Brewed, where we talk about all the important goings-on in the business world over a freshly brewed cup of coffee. We have one heck of an episode for you today. I'm really excited to share it with you, so stay tuned. Let's just jump into it. My name is John Knott. I am your host. I am from the AU Network, and I'm so excited to be bringing this episode to you today. We're going to be talking about two things primarily, and that's the possible downfall of Netflix in this 2020 year and the future of the Tesla Motor Company. I'm excited to talk about both of them. There's a lot of stuff we need to go over, and I will say right now that I'm not an expert on any of these topics. I am simply pulling from reliable and expert resources and sharing that information with you. All the information that we reference in this video, everything that we choose to use, will be linked down below, and we'll talk about the sources a little bit in the video as well. But if you care to go and do further reading and do some research for yourself, everything we use in this video can be found wherever links are located on the platform you're using. If you're tuning us in on the podcast, thanks for listening today. I appreciate it. What's up? Shout out to you guys. If you're over here on the video, thanks for watching. Thanks for tuning in. YouTube, IGTV, wherever you are. And I'll say, if you guys are watching on the video, you don't have time to finish us today, maybe you got to go do something, no problem. Go ahead, throw us up on the podcast, find your links, click, go over to the podcast, listen to us on your way to work, home from the grocery store, in the gym, going to sleep, whatever it is you got to do, go ahead and listen to us. And on the podcast, if you want a more visual experience, go check us out on YouTube. So wherever you are and wherever you're tuning in today, I hope you enjoy the episode. I appreciate you giving us your time. Let's talk about the coffee that we are using in today's episode. The goal was to pour it in the episode. You're going to see a blooper at the end of this, and you'll see why we're not doing that today. The coffee is currently poured in the cup. We are going over the Deathwish Coffee Company today. Now, I work at a coffee shop, right? And this coffee here claims to be the strongest cup of coffee on the planet. Now, I need to figure that out, because if it turns out that it actually is the strongest cup of coffee in the world, I need to order about a year's supply of it and tell Starbucks that we have some competition to deal with in the future. I figure since we're talking about Tesla, we'll go ahead and use a SpaceX mug today. Shout out to Elon Musk. Elon, follow us. Thanks. And with that being said, let's go ahead and try Deathwish Coffee Company, the world's strongest cup of coffee. Okay. Well, my initial thoughts are as followed, and if you're watching the podcast or listening to the podcast right now, you can't see this design of the bag. The coffee bag looks really cool. All you on the video, you can see this here. I'm a big fan of the design of the bag. It's a black bag with an awesome skull and crossbones in the middle of it if you're listening on the podcast, and it's a really great design. Initial thoughts on the cup of coffee is it's a very straightforward flavor. I'm not getting many subtones in the flavor. The only reason I know to look for subtones is really because when you're around coffee as much as I am, you understand what to kind of look for and taste in the flavor. It's good. It's I would not say it's the world's strongest cup of coffee, but I do like the marketing strategy. I do like it. I would definitely drink this coffee black, plain. Even, you want to put in some cream and sugar, I think it would taste excellent also, but it does taste very good nonetheless. I would recommend it. I think overall out of 10, I would give it probably a 7.2 out of 10 is where I would grade that cup of coffee. Again, this is not a sponsored video for the Deathwish Coffee Company, but if you have a coffee company of your own or you want a coffee company featured on the show, get them in contact with us. You get in contact with us if it's your coffee company, and we can definitely work out a way for your coffee to get on the show and get reviewed so that everyone here knows what they need to be drinking the next time they're putting down a business deal. Let's stop talking about that. I'm going to enjoy this cup of coffee because it's really, really good. I do enjoy it, and we're going to go ahead and jump into today's video. I'm going to grab my notebook and get into it. So Netflix had a great fourth quarter in 2019. We're going to talk a little bit here from information found on marketwatch.com. So if you see me looking down at my notebook, I'm just referencing some material we pulled from them to make sure I'm giving it to you correctly. A quote directly from marketwatch.com is simple. It's great into 2019 with revenue and subscribers. However, the outlook is not strong into 2020 with a crowding and competitive market. And that's something that I think we really need to watch out for when it comes to Netflix here in this new year, is that there are so many video streaming platforms that are coming into the market that are muddying and creating a crowded competition and market. Before we get into all those, though, and kind of what they mean for Netflix, let's take a look at how they did in their fourth quarter of 2019 compared to the fourth quarter of 2018. On the day this video is being made, the 24th of January 2020, Netflix stock was at $353.54 with a 1.15% increase. Now let's take a look at the fourth quarter of last year. The overall revenue of Netflix was $4.18 billion. This year, the overall revenue of Netflix was $5.46 billion. Netflix's net income last year was $134 million, and Netflix net income this year was $587 million. That's $1.30 per share compared to 30 cents a share last year. That is an incredible increase by Netflix. And you might be thinking to yourself, well, that's all you need to know right there. They are obviously not suffering at all. Well, those growth numbers, they're a little bit skewed because Netflix did receive a $438 million tax reduction. So you got to figure out that that had an effect on the overall profit of Netflix for the fourth quarter in 2019. Now, it's obviously a lot less they had to pay in taxes, so they're able to pull a higher profit. But if we still do look at it, there was an obvious increase in Netflix revenue and Netflix income between the fourth quarter of 2018 and the fourth quarter of 2019. And the way that Netflix has ended with $1.30 per share in the fourth quarter of 2019, it really seems that they're going to be set off on a Kickstarter into 2020. It's going to boost them on forward to get more growth. The issue that's coming along here is how crowded, though, that the video streaming market is becoming. It's really kind of getting dangerous and scary for Netflix, which is one of the pioneers in that realm. Let's just take a look real quick at all the other platforms that are out there that are going to be competing with Netflix in this 2020 year. They include, and I'm just going to read them off right here, Apple TV, Disney Plus, Amazon Prime, CBS All Access, Comcast Peacock, which is a new one, and AT&T is planning on releasing HBO Max later this year, probably around May 2020. All of those are going to be directly competing with Netflix. And that being said, Netflix is definitely not the cheapest of all of them. Grab a sip of coffee. That's really good. Netflix is about $10, I believe, and then $15, depending if you want to add screens or not. Something like Disney Plus is $6.99 a month. Now, you have a lot of people that will have no issue subscribing to both, but you're going to have some people that aren't going to be willing to pay for both. I think if we look at, well, which ones are going to win out, you can say it has a lot to do with the videos that are offered on the streaming service compared to the demographic of people that are watching the videos. I think it's very true that if you don't have people that are really into Disney, and they're not really going to be going to look to buy Disney Plus, but they're into Star Wars, that's a really strong drawing point for Disney Plus at this point. All that to say, we also see that Disney Plus is producing original series just like Netflix. And that's another issue for Netflix right now, is that they're pumping so much money into their original films that some analysts are not sure if they're going to be able to pull enough profit out of their revenue sources to make up for all the money that they're putting into their independent films. There's a lot you got to consider here when it comes if you want to buy Netflix stock. I know when I was in high school, a lot of teachers were buying Netflix stocks and they were having great years year in and year out. My econ teacher was one of them. He was always raving about his Netflix stock. And so it's something that I feel like a lot of people, it's considered a safe stock. They consider it a healthy growing stock. And if you look at a lot of charts, it says it's a good time to buy, that Netflix is a safe stock to buy. And we can see that they're doing very well. Year to year, they are continuing to grow. But the thing is, every year that we progress, the more and more competition that are in the field. And one of the things that we have to look at here is once Netflix starts to lose the rights to certain shows and videos and movies over the coming years, is that going to reduce people's want to actually have Netflix? Are the movies that they're losing to Disney Plus part of the draw to Netflix in the first place? And overall, will that affect the people who are watching and using the Netflix streaming service? I don't know. Time will tell. But that's all stuff that we do have to consider when it comes to purchasing Netflix stock or being part of the Netflix company in the future. Netflix chief executive Reed Hastings said that he's not worried about the other streaming services out there, that they are great linear content, or specifically referring to Disney Plus. It's great linear content, that the only thing it's doing is hurting major cable TV networks. And I agree with him there. You know, the videos that you're getting on Disney Plus, the movies you're getting on Disney Plus are now really not the movies that you're going to be getting on Netflix. So the thing is, if you want the movies you have on Netflix, you got to have Netflix. If you want the movies that are on Disney Plus, you got to have Disney Plus. So when it comes to those two streaming services, which I think right now arguably are the two biggest in the game because of Netflix longevity and Disney Plus's hype, I don't see them competing too heavily in the future because they're kind of mutually exclusive in their own way due to the fact that what's on Disney Plus is not on Netflix and back and forth. We have to really kind of look at some of these other ones, Amazon Prime, Hulu, HBO, Comcast Peacock, all this kind of stuff that's going to be coming out in the future that could potentially hurt Netflix because of the crossing of films. We're really going to have to wait and see if the Netflix original films do well enough to continue to pull people back to Netflix and keep them from going to other streaming services. One thing that's really positive for Netflix, and this happened just a few days ago, I believe it was actually on the 23rd, Comcast new streaming services took a huge hit. And that really helped Netflix stock soar. In fact, on Thursday, January 23rd, it increased by over 5%. 6%. And so we can really see right now these other streaming services, specifically Comcast in this case, are not yet stable. But yet right now it's in a market where it could really go either way, depending on the competency of the people behind the management and control of these streaming services. You have to be really careful right now because it's really kind of looking like what they do is dependent on what the other streaming services do. Not much unlike an oligopoly, just somewhat larger. I think Netflix is going to still have a really good year. I don't think it's going to look quite as bad as other experts and analysts are saying 2020 is going to look. I think they still have a really great opportunity to continue to grow as long as, like every other company, they continue to evolve in the way that they need to evolve. If they do that, I think Netflix has a great year ahead of them, and I'm excited to see what they are able to do. All right, so let's take a transition here with a sip of coffee. It's actually really good. It's really good. One thing I want to say about the coffee really quick is very simple, and honestly, it's the fact that you ever go to a coffee shop and get a cup of coffee and then come home and try to make that cup of coffee again. It doesn't taste quite as good, but you use the same coffee. It's probably your water. Coffee shop's water is almost always filtered 3 times over. So what I recommend is if you're trying to brew coffee at home and you don't want the water quality to affect your taste, because it will if it's bad, especially like if you're using something like tap water, it's probably not going to taste super great. So what I recommend, use a bottle of water, or even better yet, go to a store, buy a gallon of distilled water. It's like 99 cents. It can be more pure, more clean, and overall get you a better taste of your coffee, and make sure that the taste of the coffee itself is not affected by the quality of the water. So a little coffee tip for you today there in our transition period. All right, let's talk about Tesla, all right? We're gonna be pulling from a website called barons.com today, and they're gonna be using the reports of an analyst, Stuart Pearson, and I wanted to give you a quote directly from Stuart right now, and that is, Tesla shares are up 125% in the last month. That's incredible. Crushing comparable gains of the entire S&P 500 over the same span, making Tesla the second most valuable car company in the world, just behind Toyota. That's incredible. When you look at it a couple years ago, Tesla's stock was all over the place. You look at it today, it is soaring up into the 500s. A lot of reports say that Tesla's stock could be even suspected to go all the way up to $2,000 over the next 10 years. And we're going to be talking a little bit about that today. But I want to give you a little more information of what Pearson's is saying about Tesla. So let me just do a little bit of reading here for you. Pearson's is talking about the first part of 2020. He thinks that there's a couple things that may interrupt Tesla's overall winning streak and their overall gains. And those things are as followed. The US and European electronic vehicle subsidies are falling. Second of all, there are less tax benefits to buying an electronic vehicle. And also the startup costs for the Shanghai plant and the Model Y may pressure profit in 2020. The other things that Pearson is not too hyped for about Tesla is that Wall Street is just as polarized as some analysts are. When it comes to Tesla, there's bear and bull people all over the place, and they're torn right down the middle on what the Tesla success is going to look like. Here's a direct quote from barons.com. It says that Wall Street is torn $225 to $800 a share. They think some people it's going to drop to $225, other people it's going to raise and soar almost up to $1,000 a share, which is insane. That $575 spread is 100% of the current price, and the lowest is 60% below the current levels. That's an incredibly polarized market as far as what people think Tesla stock is going to do. So Wall Street is just as torn as the individual on the street may be about what Tesla is going to look like in the next 10 years. Because if you look at it, a couple years ago, they couldn't get their cars delivered to people. Now their stock is soaring because they are getting their cars done. And in fact, let's take a look at the production numbers a little bit here. In 2015, Tesla produced 30,000 cars. And in 2019, Tesla produced 300,000 vehicles. That is an incredible growth just over a 4-year period. So it shows that Tesla is still innovating and still growing. One of the things that Pearson talks about is that he's worried that the Shanghai plant and the Model Y are severely going to affect Tesla's overall income. And I think that's probably suspectable to see. We're probably going to see Tesla not make quite as high of an income this year because of the startup costs that those two adventures are going to take. But that being said, I don't think that's necessarily a bad thing for the future of Tesla. It's just showing that they are a company that is continuing to grow and continuing to evolve through time, which, as we talked about with Netflix, is important when it comes to evolving and surviving in this volatile, clouded, and competitive market. The next website we're going to be pulling for is Forbes.com, and they have a little bit to say about Tesla. They think that Tesla stock could either hit zero in the next 10 years or $2,000 in the next 10 years. And we're going to look a little bit at the growth potential of Tesla stock today. And Forbes says there's a couple things that needs to happen. So I'm going to read them here for you today. They scaled from 300% in 2019 to 2 million by 2025. And that's with their deliveries, with a trajectory to hit 5 million deliveries in 2030. Now, we saw that Tesla went from 30,000 deliveries in 2015 to 300,000 deliveries in 2019. So going from 300,000 deliveries in 2019 to 2 million deliveries by 2025 is what they need to do, but we see that they are capable of immense growth in a short period of time. Even so, they're opening up the Shanghai plant. That's going to be more production, more capability of producing more cars, and ultimately getting deliveries completed, which was ultimately, as we talked about, one of their biggest setbacks in the past was not being able to deliver on their promise. product. But if they want to hit $2,000 in 5 years, they are going to have to increase to 2 million deliveries by 2025 with a trajectory of 5 million deliveries in 2030. Another thing that Tesla is saying is that the auto market is incredibly sizable and Tesla is gaining ground in that auto market. When it comes to luxury cars, we look at 2.5 Mercedes were sold and 2.1 million BMWs were sold, and that's of 94 million car sales. Now, the thing about that's luxury car sales. We look at the new Model Y and the Cybertruck, they're saying that that's going to allow Tesla to transcend the luxury market and potentially get more buyers and more sales. Now, that's significantly going to help Tesla when it comes to meeting that 2 million delivery goal by 2025 and the 5 million delivery goal by 2030. If they can get their cars out of the exclusive luxury market and make it more affordable to the everyday person, that's obviously going to open up a whole new market of customers for them to potentially benefit from. Now, whether or not you're going to invest in Tesla stock, that's something that's definitely going to be up to you. I can't give you that opinion, but I will say I do think Tesla is a better company now than it was, say, 4 years ago. Obviously, half the controversy behind Tesla is behind their owner, Elon Musk. Some people really don't like him. I got no problem with you, Elon. Again, follow us. Thanks. With all that being said, I think that Tesla has some incredible growth potential here in the next couple of years if they continue on the growth trajectory that we've seen from 2015 to 2019. And I think the first part of 2020, the earnings announcement, which is later this week, by the way, if you're watching soon enough, go ahead and tune in for that so you can see what happens. I think the first part of 2020, the first quarter, the second quarter of 2020, that's being the first half, is really going to see what the trajectory is going to be like for the rest of this year and in turn the next 5 years to see if they're going to be en route for that 2 million deliveries goal by 2025. Now, that's to say if their stock is going to hit $2,000. Obviously, they can not hit anywhere near those goals and the stock can go very much the other way. So really, it's just going to depend on how efficient Tesla is at producing their new models, going into the new ventures, while still delivering the product to their customers. All that is really going to determine how well Tesla does here in the next couple of years. And I do agree with what Forbes is saying, that the motor market is growing and that Tesla is gaining ground and strength in that market. Soon they're going to be very close up there with BMW and Mercedes as luxury vehicles. And with them producing the Model Y and Cybertruck, they're now going to be available to the normal day person as well. I'm very excited to see what happens here with Tesla in the next couple of years. I look forward to doing more research on Tesla myself to see if their stock is something that I am going to be purchasing in the future. With the trajectory that is going, it looks very, very good, but I don't think that we can forget the past and seeing where Tesla has come from and some of the problems they faced before, trying to make sure they don't repeat themselves again, because if it's our money on the line, we want to be very careful with that and make sure that we're not getting hurt in the long run. I hope you found some of this information useful today. I know it's kind of a lot to throw at you, but we're kind of getting a feel for how these episodes are going to work. I'm very excited to bring this series to you on a weekly basis to keep up to date on all the stuff that's going on in the business spectrum, in the business world, because if you want to be an entrepreneur, you got to stay up to date on some of this stuff. And today I thought was a good time. It's the beginning of a new year, beginning of a new decade. So let's talk about some of the major companies going into the new decade and see kind of how they're doing just based on their stocks alone. And I think we see both Tesla and Netflix in a very good place right now. Doesn't mean they're going to be in a good place next week. It all can crashing down very quickly. I think we know that all too well looking into the past. Overall, thank you to Deathwish Coffee Company for making an incredible cup of coffee. I am very happy with it, and I look forward to finishing this cup here after the video. Elon Musk, again, follow us. With that being said, guys, thanks for tuning in on the podcast. Thank you for listening. Thank you for watching, and we'll catch you in the next one. This has been the Business Brewed with John Knott on the AU Network. Subscribe, like, favorite, follow, all that fun stuff. Have a highly successful day. See ya.